Good afternoon, ladies and gentlemen. Today is the 24th of Feb. The Feb monthly expiry is today. And what a day and what a timing for the expiry also to be, because just as of last night, there was a massive escalation between the Russia-Ukraine war. I mean, we knew that Russia entered Ukraine itself, but yesterday markets looked like, okay, they were fine with that. But as things start to escalate now, huge cascade. If you see the Russian index at one point was down 50%. So here it was down 50% from 1200 to 600. And yeah, massive sell off there. And as far as our markets are concerned, we opened gap down. As of yesterday, nobody would have thought that the 16,800 would be taken out for this expiry. That's the analogy everyone was working with. Everyone had very aggressively yesterday written 17,100, 17,000 put options, and some people thought they were being conservative by writing the 16,800 put option. They got absolutely butchered today morning because you had this gap down and a massive IV spike. So just for context, into the gap down, how I thought I would give you context this way. So yesterday on Twitter, actually, there was a person who said I should just carry my position, and I was just giving the analogy as to why the risk and reward doesn't sit well for me to carry. And the position that I squared off yesterday. So if you see yesterday's video, I squared off the 17,350 call option, 16,900 put option for about 40 rupees. 40 rupees, the high that it made in that panic volatility, because everyone wanted to really exit and like really run away. It made a high of 999, and finally ended up closing somewhere close to around 550. But basically right here, I would have been in a 1.8 if I just carried yesterday's position instead of squaring it off. This is why I don't carry. This is not even a black swan. This is like mini black swan, because we gapped down only a little less than 3%. And from there, we had a down move. What happens when that is 5% or 10%? You can just imagine. This would have wiped out 40% of my account had I held that trade. So that's just a little bit of context right there. And yeah, so if anyone had large exposure overnight, they would have definitely gotten butchered here. They would have to roll forward and do all kinds of things to manage. And meanwhile, my idea was into that massive IV spike that took place in the morning. My trade really didn't have much to it. I tried to place an order exactly into that IV spike, because see, you have to understand, why does the IV spike happen? People who are stuck in positions, they want to get out. They just have to like instantly get out. Which is why I tried to sell the 16,000 put option for 17-18 rupees and the 17,000 call option for 8 rupees. By the time my trade actually executed, there was a problem with Zero that gave me that validation pending thing that it does. So I'll just go over what prices I got. So you can see here, the price that it executed became 10.96 and 6.8. So because of the delay in execution, almost 6-7 points extra that I wanted from entering that position, I didn't get. But even then, fair enough. I mean, it happens in such volatility. Broker can have functioning problem, and it could also be from NSE side. So finally, yeah, from entering that position, obviously immediately there was an IV crush despite the down move and up down move. Didn't matter. I'm trading 1,000 points triangle on an expiry day with a very tight stop loss. There's really not much that can go wrong with this position. So at different points, I just roll down my calls. Into up moves, I never ever. So at all points, I roll down my calls to something which was trading under 5 rupees. And the lowest I rolled it down was still 16,700 finally. The idea was into the up moves, like into the pullbacks, you just had to do nothing. Here. I mean, as soon as I entered my trade, I was in profit. This entire time I was in profit. Now into this up move, everywhere I'm into profit. And if we're going down here, I'm in profit. Here, once we failed to take out this high, I rolled down my call to 16,900 and then to 16,800 and then to 16,700 directly once we broke this low. So only two adjustments. Entered here with 16,000 put sold, 17,000 call sold. Didn't do anything into all of this. Right, once this failed, once we didn't make a higher high, once we made this candle, it was confirmed as a lower high. I moved my call down by 100 points. Right, as we broke this low, the day's low, as we broke it over here, I rolled down my call again to 16,700. That also for some 2 rupees 50 paisa. No intention to take risk. See, there will be opportunities all the time. Today, if you see, there was amazing premium available, even closer. But I just had no intention of dealing with this because as it is into this, my portfolio is going to be losing big time. Now, on top of this, I don't want to make any trading losses. So even then, it worked out to much better than 1%. And yeah, into all this down move, whatever, I was so far away on my put options. Literally, you can see the only put strike that I have sold, only put strike is 16,000 put. Not done anything after that. And once a little bit margin freed up, I managed to like increase the sizing a little bit, but that's about it. So apart from that, I booked a loss on the TCS trade. So just to go over this Nifty trade, this was the Nifty trade. It gets confusing because of many line items. TCS, I was holding a fully hedged position. It gave me 1.65 lakhs loss. That's fine. Max profit was around 5 lakhs. And if you see the hedge over here, the savior for this trade is this. You see this 3,500 put, it has protected me from an additional 5 lakhs of loss. I have the margin to carry this trade without a hedge, but the fact that I added a hedge made the difference between 1.65 lakhs and 6.65 lakhs. So that is, I mean, even though it's a smaller position, always kept it hedged. I exited it now because to manage it, I'll have to pump in much more margin and I'd rather keep that for intraday. So as of now, I have no positions open. Look, everything got smashed today. So the best way to buy this is through ETFs. I bought Nifty Bees, I bought Kotak Alpha, which tracks the Alpha 50, Junior Bees, and Bank Bees. Right, so these are ETFs. I've bought them now. I will keep buying for every 200 points of fall from here. I will keep buying, converting more cash and debt into equity. You should also really start considering these are the times that you buy, and you'll never be able to time the bottom. So just buy little by little. Best way to do it is try to at least spread it over 10 purchases, right? Or at least 5 to 10 purchases. You can split it. So that's about it. Actually speaking, the expiry wasn't hard because I mean, some of these pullbacks were very annoying to the upside, but it could have been managed if you had kept far enough. There was enough premium for people to stay far. Don't necessarily have to be very, very close to the market. And yeah, that's about it. Looks like we're getting into a very uncertain situation in the market with closing. India VIX is closing at 32. My only advice would be don't think of this as a big opportunity and then now go completely short volatility. You don't know. Anything can happen. Escalations can happen, and we can also have a situation where our VIX shoots up above 50 as well. So it's completely possible. At a time like this, don't try to take too much risk. There are two ways of looking at it. It's an opportunity, yes, but opportunities always come with their risks. So don't go overboard, right? And try as much as possible. If you want to buy the dip, do it in cash. Don't use leverage to do it. Don't use options and futures. Just buy in cash, slowly add over time. So that's about it. Really not too much. My order book is there, and not too much in the order book also because I just went over the entire trade. Not much to it. And yeah, thank you for watching. I hope you had a good expiry, and I will catch you tomorrow. We'll see where the market opens, what premiums are available. I might as well decide to take a break. All depends on where we open tomorrow, what premiums are there. Okay. Thank you so much for watching. Take care. Have a good one. Bye bye.